Hey everyone, it's Daniel here from etfs. Hope you're all doing well. So, I want to talk about the housing market. The housing market is a very interesting topic because you have a lot of people on either one side of the fence or the other. Either, people pushing and saying that prices of real estate is going to be fine, nothing's going to go wrong. We're going to see prices not dip in this recession, in this economy. It's going to do well. Even if it does, don't worry, it's not going to be that bad. It's going to be very little and short lived. Yet the other half is saying that, okay, we're going to see big deterioration, especially with the commercial real estate side of things. It's going to be really bad. It's going to seep into also the residential and so on and so on. Now, here's the thing. The housing market, the private markets out there versus the public markets, the stock exchanges, the REITs that are publicly traded. When you look at the REITs that are publicly traded, there's about, you see many of them are down about 30%, right? 30% plus. And a lot of them are trading at a discount, and a lot of them have seen their share price completely tumble. Depending on which REIT you're looking at, right? You can look at some office REITs, commercial REITs completely plunging. You can look at some residential a little bit better than the commercial ones for sure, but also are seeing their price a little bit depressed and coming off. But the problem with the private markets, the problem with the housing markets is private and there's no stock exchange, there's no central system, and you can price it at whatever you want. You can, even if it's not the right price, you can decide that, hey, I'm going to sell this house for $2 million, even though it's not worth $2 million, right? And this is a problem of mark to market, and especially in the institutional world, with private equity and with hedge funds and BlackRock and Blackstones that own massive amounts of real estate. The mark to market is such a problem because, whatever the rules are, they don't really have to follow the rules. The private equity industry doesn't have to really follow much of the rules, and they don't have to mark to market. They don't have to really price their assets the same way, or value them in the right way, and they can value them at very high prices. I remember, I think it was BlackRock or Blackstone, one of those two big institutions, saying that our real estate funds have been doing well year to date and actually has been in profits year to date. However, on the other hand, you hear all these news coming out from BlackRock, Blackstone about withdrawals, halting withdrawals, that no, investors cannot get their money back because obviously nobody's buying. The demand has completely been crushed. Right? The rates are high, no one's buying, and there's no buyers out there. So if, these institutions decide to sell, they don't want to sell, they don't want to panic sell, and they don't want to sell at a massive discount and cause the markets to be riled up. And this goes back to also a very old article, and I'll link in the description for you. It talks about Lennar. Lennar is basically a home builder out there. It's a big institution in the real estate market, selling dozens and dozens. This article talks about selling 5,000 homes to big landlords. Okay, and this is the problem again, right? This is the problem with the real estate and the private markets. The rules, the rules are made up by them. And so you can get Lennar to come out and say, okay, we don't want to sell the houses out in the public and publicly show everyone that, hey, we're trying to offload these properties and we're worried, right? So let's do it secretly. Let's sell 5,000 homes to big institutions, big landlords, big hedge funds quietly, and not really tell the markets out there what price we're dealing with, or, and not really shock the markets because we still have a lot of inventory, or, we've got houses that we still want to sell and we want to sell them at, the high price, right? The time in 2021, 2022 when everything was early 2022 when everything was high up there. We still want to sell and push these properties out there and sell it to you, the public, at a shitty price, right? When really the value of these things should be much, much lower. Just look at the REITs again. Look at the public markets. The public markets are very efficient. They are going out and punishing these REITs and these stocks because they know that the true value is not up at these 2021 prices or 2022. It must be much, much lower. And especially with the recession and a hard landing that is expected to come, and with the central banks looking to keep tightening conditions for a long time, with the unemployment rate expected to also skyrocket, there's no way that these prices and assets are not going to be affected. They're going to be affected. There's going to be people out there who are going to lose their jobs. They're going to end up wanting to sell their homes and sell their houses. There's going to be people out there, landlords who have tenants who've lost their homes, and these landlords who may have variable rates, which is actually happening right now, who have variable rates and are unable to pay those houses, which will end up into panic selling, right? Although we don't, definitely, I'm not saying I want this to happen or anything like that. And this is a very horrible situation for anyone to go through and be in. But there's definitely a difference between what the public markets are doing and saying and trading versus the private markets, and how these institutions out there can manipulate things and make things look good for them, while you, the average person, you and me, the average person, may have to suffer with whatever the consequences are going to come out from this economy. It's better to be prepared than worried. I don't mean to push out this information so that as a fear-mongering video and where you start worrying all of a sudden. It's more of to get you educated and understand what's happening out there so you can be prepared and be more of a warrior rather than a worrier. But it's things like this, when you get Lennar, when you get institutions, when you get builders playing games out there and people out there who are saying that, hey, things are going to be fine, when on the other hand, if you're looking and you're following the macro data, the macro news, the rates, the inflation, the central banks, you read word for word what the central banks are saying. You live, you eat, you breathe, you drink, the language from the central banks. And I'm not saying the central banks are 100% right, but understanding and looking at the macro data and putting it all together, it tells you that the end result of where this is going towards is it's not going to look good. No matter how much that sorry, my video got cut off. But going back to what I was saying is that no matter how much these central banks come out and people come out and say that, oh, the banking system is fine, everything's safe, it's not true. I completely disagree with it. You can laugh at me all you want. You can say anything you want, whatever you want. Time will tell. Honestly, time will tell. And we will see with the data and with what's coming, it's not looking good. And this is what makes it really, really difficult out there to really read and judge, especially the private markets, just because they've got so much room to do whatever they want, especially these big behemoth private equity firms, BlackRock, Blackstone, and so on. So let me know what you guys think. What's your area looking like when it comes to real estate? Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, and bye.